Hey everybody, Boris last week from BK Forex. Welcome to our Forex Daily Technicals for 2613. Aussie takes a beating. As always, past performance not indicative of future results. Trading Forex carries a high level risk and not be suitable for all investors, and high degree of leverage can work against you as well as for you. You can lose all of your initial investment, and therefore the possibility exists that you should sustain a loss of some of your initial investment. And you should not invest money that you cannot afford to lose. You should be aware of all risks associated with trading on margin and seek advice from an independent financial advisor. Information contained here should not be relied upon as substitute for extensive independent research, and the information and opinions presented do not take into account your particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their own unique situation before making investment decisions. We're not responsible for any losses incurred on investments made by readers and clients as a result of this information, and we do not render investment, tax, legal, or other professional advice. And such advice is needed, please seek counsel of a professional investor. Well, Aussie dollar. This chart right now pretty much says it all. As we've been saying for several days, 103.50 has been the key level. Last night, horrible retail sales just drove a stake through the heart of this trade. Look at how low it is. It's just getting it broke the 103.50 level, and of course once that level is given, it's pretty much to the downside as we've been racing all the way down. The next level of support, obviously, here, if we go into the dailies, we have to go all the way out into a full year's dailies. Next level of support, of course, is the 103 round number, but generally, given the fact that 103.50 was broken, the next sort of a spike level here is 102.86. So that's probably a reasonable expectation of where we could stop and pause in this downdraft. But the 103 broken here on a longer term time frame. This is a daily time frame. You see this big range, and as we broke our way down, looks pretty bad. And clearly the trend now is to the downside. 102 is the natural target of this move as we accelerate to the downside. But more importantly, as I've been saying for a very long time, once this level was given, it's been pretty much off to the races on the downside. As 102.50 is the next longer term target here, as if we drop basically into the lower range. Everything in the Aussie just does not look healthy. 104.50 is the top side resistance level if it tries to retrace back, and it really doesn't become bullish until this 104.50 is retaken. So that's pretty much where it stands. It looks negative. It broke down. It's been very weak for a long time, and today, of course, it broke the key level that took us all the way down very quickly. Euro Aussie, on the other hand, of course, the flip side of that has not really been racing too much because Aussie has been dragging down everything, I think, as the trade has started. But we're now above 31. The Euro Aussie, of course, the highs here is 31.90, 32. That's the key level to retake if the weakness on the Aussie continues to the downside. The Euro itself also not having a great day. We're a little bit down here. If you look at the 4-hour charts, we are basically in a retest mode of the 135.50. Yesterday, we broke up all the way up to 36 and then came right back down. And I think this is actually pretty emblematic. We've had this big move, and now we're just nothing but a consolidation range in the Euro. The Euro consolidation range is bounded by 34.50 to the downside, which was a test yesterday, and 37 to the upside. Now, we take out 34.50 to the downside, as you can see over here. That's very negative. It's a similar type of construction as you had in the Aussie, where if you took out this very key support level, we're flush to the downside. We could go all the way down to 33.50. We'll see if the ECB or anything else this week could trigger that possible move. But for now, we're pretty much consolidating within an uptrend, and that's where it stands. Not very interesting. A break above 3,600 could give us more of a run towards the highs, but until that happens, I wouldn't want to get involved on the long side. On the short side, obviously, a break below 34.50 is a very negative development. And then cable just continues to sink lower. Cable, of course, now is testing the lows that we've made. I believe, was it yesterday? The lows right here, which is 56.30, just within a whisker of that. That gets given. I think it's very probable we go all the way down to 5,600, tested below 55 level. But the cable was the same situation. We had the 56.80 level yesterday that we talked about. That got given yesterday. Now it's just been in a continuous downturn as it continues to move lower. And lastly, yen is the one outstanding example of still holding near its highs, although the 94 level just did not get done here. We did get we did get taken out at 94. I didn't even see this. We got taken out at 94 a little bit earlier, but it got rejected. And that's going to be the key thing here, sort of the idea that if we can't hold the 94s, and we take out, this is the more interesting part here, if we take out 93.50s, this could very much be sort of a near consolidation term top with some further downside that we can go. So 93.50s to the downside could give us even further selling as profit taking comes in. The reason why the 94, 95 level is so sticky is if you look on a 3-year basis. Oh, actually even longer. Let me see. No, you see that this 95 comes up against a very, very serious double top. So this 94, 95 is going to be a much harder level to penetrate than we've had to move from 90 to 94. And I think that's why dollar yen could be a potential sell now, especially if it starts breaking to the downside, taking the 93.50 to the downside, and then all the way down to 93 as the day progresses. So that's pretty much how everything shapes up. Some really interesting key levels, both to the upside and to the downside, have been taken out. And further continuation could be happening in all of the pairs. This is Boris Schlossberg, wishing you best of luck and best of trading. Over and out.